Hello, welcome. Good evening, everybody. It is 8 p.m. It's time for our monthly end of month and almost two-thirds of the way through the first quarter. Unbelievable. Last trading week in February. So we're going to get through the couple things here that I think you're going to find not only relevant, but walk away with a couple key bits of analysis that hopefully you can actually use for this week's trading. We got a lot of things happening this week. Everyone's making a big deal about, of course, the biggest behemoth, and for good reasons, a small stock company called Nvidia. And then again, watch what happens on Friday with the PCE, the personal consumption expenditure, the core rate of inflation figure that the Federal Reserve really hones in on. But first, before we begin, let's take a second to read this disclosure statement. And as well, I wanted to just give a couple. Bill is from Honolulu. Aloha, Bill. Good to have you with us tonight. Lamont in Dallas. Cumming. I don't know where Cummings. Jerry's from Cumming. I don't know where that is. But Andy, good morning, good evening, and hello again, Andy, with being with me all day. Yvonne's from Fort Lauderdale down the street. I'm over here in West Palm Beach, Florida. It's freezing. It's about 67 degrees out right now. What can I tell you? Lake Lanier. Jimmy, you're gonna love tonight's presentation. God bless you, man. It's great to see your name. All right. I think everyone understands trading is risky. Let's get into it. Who am I and what do I do? Well, I've been around a long time. I've written a few books. And what's interesting is some of the things I'm going to share with you tonight has really been, I think this year will blow up a little bit more in public forums, because this is the 20th anniversary officially of candlestick pivot point trading triggers. 20 years ago, not to the date. I think it was the first copy was released in May, to be truthful. But candlestick and pivot point trading triggers. That's the one where I had brown hair. And I was probably a little bit thinner back then. But that book right there, candlestick and pivot point trading triggers, came out, and that really, a lot of what you're going to see tonight is based off almost everything that's in that book. We actually had the second edition called Candlestick Pivot Point Trading Triggers come out, and then Mastering the Stock Market to gear the same type of stuff for trading equities. So that's pretty much where I've been in the last, 20 years, and we've kind of gone into asset management and doing a private fund using our analysis. So I'm going to just go through this checklist because there's going to be a few people that are going to want to see this on the recording, or you may want to revisit this recording. And by the way, it's being recorded, so if everything works out well, we're going to have this all available for everyone. So my go-to indicators, and we just did a workshop, and I think if I have the time, I'd like to share with you, because I know there's a lot of really relevant, popular tools out there that people are using. And I think one, of course, besides looking at MACD and Bollinger Bands, and also Ichimoku cloud charts, as I refer to them, and actually in our workshop that I just did a week ago for our some of our clients, and I was introduced to the cloud analysis at an IFTA conference, the International Federation of Technical Analysis Society, where I was speaking. I was one of the guest speakers, and a guy brought in, I think it was, believe it or not, it was really strange. It was in Bosnia, of all places, where we were invited to speak. And I was like, okay, it's a series of moving averages, and I'm not going to get into the cloud analysis. But what we did in the workshop was we kind of said, listen, there's a lot of relevant indicators out there, but still to this day, nothing's surpassed, I think, the futuristic and predictive powers of both Person's pivots, as well as combining it with my favorite go-to indicators, which is right here. Obviously, I'm looking at the PPS indicator. Many of you, if you have Thinkorswim, and we're going to just share with you this chart because this is what we have up in our live trading room on a daily basis. Now, you'll probably wonder, what do we got? The S&P, the SPY, the Qs, the Russell, TLT, which is a position you'll be interested to know. We were long this, and we took some profits today on an option. and I'll give you some reasons why we got into that trade. Nvidia, which has earnings out on Thursday, Meta, which we've had some day trades on, Boeing, which we have an option position on and looking for an upside pop out of Boeing. I look at the VXX, not the VIX, but I look at the volatility ETF of VXX because it's tradable and it has the ability to use volume trends. And one of the volume tools, I'm just going to use Thinkorswim, because if I could just ask this question to the people that are in the audience tonight, and again, thank you very much for joining me tonight. It's late in some parts of the country and it's early in others. Does candlestick, a question from Gerald, does candlestick and pivot point trading triggers supersede the other books? Before I answer that, I'll answer that question. I'm gonna go through that right now. I usually go through my material, but I think for those that have Thinkorswim, we'll get back to that. I can answer this question quickly. This original book, this is probably the go-to book, is the second edition. The difference is this was hardcover, and if you buy that, it's probably a little outdated with the examples. So when I first wrote this book, Gerald, thank you for your question, Candlestick and Pivot Point Trading Triggers. When I first wrote that book, I was writing about these brand new trading asset products called ETFs that were being used. The first one on the euro currency and the FXE, and one that just started trading on gold, GLD. That's how ancient that book is. So you probably want to get the updated second edition Candlestick and Pivot Point Trading Triggers, because what we're going to discuss tonight, everything in this book, the second edition, you're going to see as we go through it. In the meantime, on Thinkorswim, we're going to go right over here to studies. And if you go to edit studies, you'll find that what's on this page is the PPS indicator. That's these arrows. They paint a picture of bullish momentum and bearish momentum on the candle. So if we wanted to add one other function here, which I'm going to do right now, I'm just going to cancel this. We'll do it real quick. We go to studies, add a study. Now, if you want to find where you get the PPS as an indicator on any stock, futures, any time frame, go to John Person. Make sure you get my name, John Person, and it's the PPS indicator. So what I want to do now is just introduce a different study of volume, and we're going to go to all studies, try and make the hyper jump here. We're going to go to all studies, and we're going to go to what I like to use is on balance volume. That's what I have probably been teaching for 30 years at least. And by the way, everything you want to know about on balance volume is in both the candlestick and pivot point trading triggers, by the way. So let me make the hyper jump. We go back to MO, make the hyper jump to this box, go down, on balance volume. And here's what I'm describing, that when you're looking at a move, if you're thinking there's any substance behind it, you want to look for a volume move that coincides or at least might lead prices higher. So the volatility VXX has the ability to track the volume, whereas the VIX does not. For that one single reason is why I track and watch the VXX. The green dash line was put in manually because for me and my work, I like to look at where it has been tracking, and pretty much, as you can see, it's been trading north and south of about that green heavy dash line. It's a kind of a breakout and a pullback kind of swing line, so to speak, that I inserted in there, I don't know, weeks ago. So that's just for our own trade room consideration. Palo Alto Networks, you'll get an idea of what we're doing with that. D.H. Horton, you'll get an idea of what we're doing with that. D.H. Horton is a home builder, in case you're not familiar with it. Again, we were looking for an upside breakout. It's one of the trades that we talked about last week, because we'll get into that in a second. And I think there's some good opportunities still in the home builders like D.H. Horton because of this situation that's developing right here. And it is the bond market. When TLT, when price rises, yield comes down. cheaper yields is a good thing for the market. It's a good thing for interest rate sensitive items, and they're fairly correlated, obviously. Uber Technologies, it's one of the interests that we have, and Amazon, which we just picked up today, by the way. A lot of this work that we go through are based on these tools. A PPS indicator. I like to look at a little bit of moving average indicators. So I like to see one example I gave you. If prices are rising, I like to see if the moving averages are also helping to determine that the market is moving if prices are above rising moving averages. So one of the things that the PPS indicator has, it's separate. There's those two moving average lines that are overlaid on the charts. These two moving average lines. If price is bullish, they stay north of the moving average lines. All right. The moving average lines do not generate a buy and a sell signal. They just help to identify the trend of the market. Bottom line. So I just think that when we get into looking at the third bullet point, volume, and that's what I was sharing, I look at volume indicators. Now, on balance volume is one tool, and I already alluded to, as volume trends up, it supports the price move. Volume should precede price, meaning volume should go up a little ahead of price action. And so when you look to see if price has really got the potential to move higher, you want to see, other than my indicator and my opinion, or or yourself, if you have the opinion that something can move higher, you want to see if everyone else or other traders in the know, because there's always someone out there that has better intel than ourselves. I'm not saying Nancy Pelosi trades on inside information or others like that, but I am saying there's other people in the know, and you always see really kind of weird things in this market environment. One of the weirdest things, not weird, that's the wrong terminology, but for right now, let's just be professional and polite. And let's call weird. I'm going to switch now to TradeStation. And one of the things that I'm going to share with you is a small company called Nike. All right. So we're going to look at Nike on a daily chart pattern, and I'm going to explain everything that you see on this chart. You already have half of it already understood. The PPS buy and sell. These are the buy signals. These are the sell signals. What you see overlaid with these lines, these horizontal lines, those are the monthly person's pivot indicators. What is this? This is a relative strength tool that tells us what the condition is of the relevance of the market compared to the S&P 500 in relative percent change strength or weakness. This tool is called the PMC indicator, a relative strength tool. By the way, it is available on Thinkorswim. So if we take a look at the same chart, and I'll do that right now, let's use Palo Alto, and we're going to maximize this, and I'm going to change this to Nike. All right, and I'm going to change this over to a daily chart, and we're going to just go over to studies, and we're going to add a study. We're going to find John Person's name, and you're going to hit PMC. There's the relative strength tool. Here's on balance volume. Now, you can kind of see a little bit of what I'm going to show you on TradeStation right now, and you can clearly see that the level of this low is lower than this area in here. Can everyone see that? Press 1 if you agree to that. Is the current low that I'm talking at 68.62, could you see that this low is a lot lower than here where it was in January? Everyone can see that. Fantastic. Now, if this is really weak and it's taken out a low, you would think that it's just going to go down forever and there should be heavy volume. But quite frankly, there's not that much heavier volume because we really didn't take out the low of the previous price action where the indicator meets price. If you compare this line, this point of intersection with price to indicator, and you compare indicator to price over here, you notice it's almost the same. It's a slightly bit different. And the relative strength percent change, the relative strength PMC indicator clearly has a a higher right side than left side. This is the left side where the price was. And as you can see, this is pretty nasty. So let's go back. So if everyone can see that, put in a 3. It's easy. Perfect. Awesome, Jim. Now, if you take a look at this, this is a proprietary volume indicator that's found on a few platforms. And this is what we created. And this has actually modified. It is a momentum. It's got several components to it. It's got a volume, it's got a moving average, and it's got a momentum based on percent change of the volume. So the momentum, if the price is so weak, the momentum should get down and dirty. And the momentum relative to the last low was not as low. Clearly, the momentum and the shift of the volume tool shows a much more dramatic, highlighted convergence, meaning if I lied to you and said that this was price, you would say, oh, it's a higher right side double bottom. Man, this thing isn't that weak. It rallied, it pulled back. It's got a nice little shallow pullback. It's probably getting ready to accelerate. So I'm giving you the walkthrough story of Nike because this is one of the things we were looking for. And if you look at the dates here, this is 2/6, this is Friday 2/7, and then there was an event that happened that next Sunday on the 9th. It was called the Super Bowl. So what happened to Nike? A bunch of investors like Citi, I think Barclays, and I'm not quite sure who the third investor conference group bank, investment bank was, but they all got together and they downgraded Nike. Now, they downgraded Nike. By the way, I think it was here, it got, at this point, which caused that gap, it was upgraded by a different company called Jefferies. So someone came, and here's what's amazing about this market. I don't know, I always joke around and say it must be inside boys talk for the in the know folks, that they downgrade on lows and then they upgrade on highs. But let's take a look of Nike. They couldn't downgrade it at 177. They didn't downgrade it here. They didn't downgrade it there or here or here or there or here or here. They downgraded it there. And if you look at this momentum of volume, less people are getting short, more people are buying into Nike at those lows. So what's exciting is that this is a monthly chart and this is the end of the month and we're doing our scans. And so I'd like to just share with you, there's a couple trades that I think longer term, if you got patience, the ability to ride a trend out a little more, you've got Nike with a potential pattern. It's called a high close doji. Jim F., you're down in Texas. I believe you're still in Texas, right, Jim? You should know about that high close doji. A high close doji is extremely a high probability trade. It was written about in that book 20 years ago, and it's so powerful, we actually have a scan, and we'll share that with you in just a few minutes. But the hanky-panky on Wall Street, there's always something going on. And Nike today, obviously, up almost 2%. So Nike's got a big recovery. Jefferies came out, by the way, and with their upgrade, and they gave it a price target of 80? No. 90? No. 95? No. 100? No. 115. The only fundamental shift that occurred, and this is where I want to walk you down why technical analysis can help lead us to better paths and kind of avoid headline news that could distract us, because this is very important for you guys, because we're getting a lot of this distraction, and I don't want to call it bad news, but news that might scare you out of trades, right? If you're a bank and you're a big bank, if you're Citigroup, right? JP Morgan, Morgan Stanley, it is your analyst's business. You pay them probably $500,000 a year, some of these guys, these analysts on Wall Street make, to know everything there is about that company. And for you to come out 2 days before the Super Bowl and downgrade Nike because you think it's got no potential to go up. Let me also announce right here, I think it was on February 14th, less than 4 days after the Super Bowl, Nike announced their affiliation with Kim Kardashian's activewear brand. Now, if you're a guy in the know, wouldn't you know somebody at Nike who knows somebody in the marketing who knows someone that they've been talking with Kim Kardashian's business of her billion-dollar athletic wear to do an associate merger or at least sponsorship or work together with their athletic wear as well as working with Nike? You would think that somebody in the investment world would have that inside information somewhere. So for someone to come and downgrade it, the only possible thing I can think of is they came out with a downgrade to get people to sell it so they could buy into that dip for themselves. Unscrupulous, I don't know where the SEC stands on that, but those are the facts. That's the timeline, and the charts don't lie. And everything I said is Googleable, and you can follow the path. And it would be very interesting to find out if the SEC is on that to see who was actually buying into that dip. But it's just one more example of what goes on and I'm not giving you an example from 14 years ago. This just happened and it's active currently, all right? Can't make this story up. But clearly you could see that the market sold off and the volume was incredibly light relative to the previous decline that came into pivot support levels. So my prognostication on Nike is that we've been talking about this in the live trading room for many weeks. We have options on with our live trading community. In fact, now I'm going to introduce something to you that I do on a weekly basis that's kind of a part of the live trading room. This is our weekly newsletter. This comes out every weekend, all right? Basically, I tell people what happened last week, what might be important for this week, where I think the market might head, weekly support, which while we did break that support for about an hour or so today, we closed right around, coincidentally, the person's weekly support in both the S&P and the Qs. We'll get back to that in a minute. These are yearly opening prices. Where did we begin the year from? There is where we began the year from, and we came to check and test the yearly opening ranges. If we come down to these levels and test that and close higher on Friday than that level, this would be a successful retest of the yearly open print, and dips are safe to buy back into the marketplace. So a lot of things that I do is, technically speaking, we could look for maybe a move a little bit lower, so we could see our outlook, which we're looking for still a potential move lower coming from this weekend, and we got it, right? But we're not looking for a big move. One of the things that we're out there with is D.H. Horton to look at being a buyer. Twilio, Transmedic Group. This is a medical company that transports, by the way, this sounds morbid, but this is pays a dividend, and this is a company that transplants organs. And it is in the S&P 500. Apple, Amazon, and Nike. So again, Nike, we added it to the newsletter, and here's what's kind of neat. We kind of take activity of, and post what we did. Just if you want to know where we've been and what stocks we've been hiding out in. We were long Cloudflare for a while, and we trailed our stop. Last week, we got stopped out from 109 long at 157. Alibaba, while everyone's now looking at buying it, we took profits last week at 138.19. We were long from 81.40. Beamer Technologies long from 289, got out of half at 612, got out of the other at balanced at break even. So what my point is that while we have, and there's a couple trades that didn't work out, obviously, like the Russell, lost money in that, but we entered into Palo Alto, Twilio, and here's some of our current positions, except for this one. This option trade right there on the TLT, we took profits on that today. So here's where we get some of these juicy little trade setups. By the way, we're still long Uber, and you can see what this key phrase is here. Raise the stops. If you're long at 66, then raise your stop. We trail stops. That's the thing when we get to a certain level. And that's what part of this trading journey is about. Managing your risk, finding opportunities and managing your risk, whether you're doing options, covered calls, You got to find opportunity, and that's what this does. How do I get these trade ideas from? I use these go-to indicators here. The relative strength tool. So relative strength is the tool that I use, which is the PMC, which I just demonstrated with either both TradeStation indicators as well as Thinkorswim. And again, the whole thing evolves around person's pivots. All right. So that's how we get. Flab Louis says, "Is it Fab Louis? Fabulous Louis? It is awesome to get it on a Sunday. You're right. We get it out on Sundays for people so they can place orders ahead of Monday's open. So that's part of the whole thing. Market insights. These are the trades that I believe are setting up for a good March through May period for more upside. Boeing. That sounds really absurd, but let me tell you from a psychological element, Boeing hires, as dumbfounded as and bumbling as they have been as a company. I mean, I don't want to get into a little comedy act here, but let's face it. You build a plane, you don't want the doors to fall off, you don't want the wheels to fall off. We've seen that over the last few years. You would think that you could clean up your act and, make sure the guy who has the drill that bolts the door on, make sure the bolts, actually, they kind of went in the hole, right? I mean, kind of thing. Secure the safety latches, that kind of thing. D.H. Horton, Broadcom, data center build out. What is Broadcom? Obviously, it's a technology, it's a semiconductor, it's a little bit more than that, but they are the essence behind the backbone of what is really the real deal, and it's not rumor, and I don't think it's outplayed. It's data center build-outs. Apple, I think we can take that off the list because it already kind of moved. Amazon, but as I just shared with you guys, Amazon was one that I think is right here. We bought in a 50-50 scaling. I didn't buy the exact low of the day, but we got a good average in, half at 214.41 and the other half at 207. Look where the stop is, 194. The stock gets up approximately 5 to 6%. You know what we do with the initial stop? We trail it. We move it up. That's part of the whole process of trading. Estee Lauder makeup, Nike, MongoDB, AI software, Novo Nordisk GLP-1 drug still has a lot of potential for upside, but it's struggling at the base here. But I still think that these are stocks that should start to see some increases over the next few weeks. Devon Energy, smaller cap seasonality trades. Devon pays a nice 3% dividend. It's down today. Cleveland Cliffs down from here on out, going under the current administration policy to build and develop. This has potential. It's fairly cheap. It's cheap in multiple ways. It's cheap in price. It's cheap to PE. It just came out with earnings and just got its head knocked in. We'll take a look at it in just a minute. So now it's presenting some decent opportunity here for low risk for the next 6 to 9 months, maybe, and you'll get something, and we should get some kind of recovery going into the March-May period. Community health systems. I'm going to go through this one right now. This is almost like a penny stock. I'm almost embarrassed even to put that out to you. CYH. It's a real company. It's not a pump and dump. It's not a scam. This is CYH. We recommended this trade in our trading room. So I want to give you the impression as a disclosure. These are things that it's already had a decent day. But look, it's trying. You can see our little... if you see lines in there, we've been working with this particular position for a little while. The trend of volume. What does this company do? They're like medical center, little hospital. What do you call it when you walk in? Like kind of hospital. Walk-in hospital things, thingamajiggies. On a live tape, I can't imagine. I just used the word thingamajiggy. They're based out of Tennessee. We ran a scan the other week, and as I was running the scans, and I mean, when I say running a scan, I mean, I was running my TradeStation scan, and I'm doing my morning briefing for our trade community, and I go, oh, look at this, we got a stock here, it's in a healthcare, and I look at that, I go, yeah, the volume's pretty good, and it was a surgery center company, And as I'm talking about the stock, this isn't it, this is RTX. As I'm talking about the stock that showed up on this scanner as a daily buy signal, it opened up about 25% higher in front of me. Now, the problem is the scanner only tells me what happens at the end of today. How it opens tomorrow morning is a different story. But what the news was that I didn't get the memo to, even though despite the fact it gave a nice little buy signal and everything, was Bain Capital was buying the company out. So what does that tell me? It tells me that a couple things that in the last year, part of the growth, and this is a little bit of hard work and stuff we write and put together for people, but we go over a lot of this in our live trading room too, is that the unemployment or the jobs, the monthly jobs report has been showing huge masses of growth in both government jobs, more importantly, huge amounts of job growth in job creation in the healthcare industry. So anything healthcare related, that's where the growth has been, that's where the hirings have been, that's where the money's at. So that means that maybe perhaps smaller cap companies are being easy targets for takeout. I'm not saying CYH is that potential, but if you follow me here, it's kind of going. So I would suggest do a little bit of due diligence, but this might be a little bit longer term than just March through May period. But those are just a small sample of a few things that I came up with that I wanted to share with you guys over the course of that I think are relevant. And we're going to go over some of these real quickly right now. So this is Boeing. Boeing, why Boeing? You know, as bad as it looks, it's already been in a monthly buy signal. That's a PPS buy signal on a monthly basis. The momentum of the volume is improving, and it's the end of the month. So again, this month, right now, February, concludes Friday. The weekly, if you take a look at the momentum of the weekly volume indicator, it's been, people have started to acquire, that's what these green bars show. People being other than John Person, investors are acquiring this stock between what seems to be right around 160. I'd say the midpoint where it broke out of that swing high right there and broke through the pivot point resistance. So between 164 and maybe someone bought the high at 187, but somewhere in this range, they'd be buying the dips. You can see kind of like a little shadow, a little shadow, a little shadow. Every time it kind of dips, you get some supportive volume behind it, right? It's not like over here where it rallied, and then all of a sudden the momentum of the volume starts to weaken and goes negative. If you're in something and the momentum of the volume goes negative, it's no bueno, no good. All right. So that's one of the things that I think that Boeing, now this might be a little while, but as long as we hold a trend and the support in here, Boeing may see some surprising upside over the next course of the next quarter or so. Now, I'm going to cut the chase because everyone's going to ask me this question. Well, what's your opinion on Nvidia? We already had that question proposed to me in the live trading room. Boeing has a kind of Nvidia kind of has a very strange scenario to it. In fact, it may be hard to see, but if we take a look at the moving averages and you take a look at the price is really not far from where it was in June. So let's count together. June, July, August, September, October, November, December, January. It's now February, 8 months. Anyone that's been in this trade for the last 8 months took some heat, didn't get a lot of profit. It's been actual sideways, and you can see that via these moving averages. So quite frankly, it's kind of fair value. The momentum of the volume has weakened because people are probably a little bit nervous about this trade. But Nvidia has not really accelerated in valuation. If you think about it, since June of 2024, it was at 132 and it's actually lost money. So if you bought it in June and you were holding, it's actually lost money for you. The funny part is, let's take a look at the fundamentals behind it. It has a 51 forward PE, and the 5-year low is 51. So it's at a valuation where it's at a 5-year low of its price to earning ratio. So relative to the last 5 years, it's kind of cheap. relative to the last 8 months, it's gone nowhere. This is a stock that probably, as I said in the live room, and I'll say it again, if it gets knocked down a little bit ahead of its earnings, and tomorrow after the close is earnings, if it knocks itself down a little bit more, the odds are it's going to pump right back up to where it once was and stay a little bit more sideways. I don't think the AI revolution is over. Jensen Huang, the CEO, has used words like insane demand, and he's been extremely colorful of his product. It's jokingly, and I'm just going to use the same material that I did in the live trading room today. There's only one other guy that could really be truthful and say demand is insane for our product and we can't keep up with it. And that was Pablo Escobar back in the cocaine cartels. So, I mean, he really did have insane demand, right, for cocaine back in the 80s. Jensen Huang, when he comes out and says insane demand for my Nvidia Blackwell chips, I mean, if he comes out and he didn't sell anything, it's going to be a problem. There's no doubt about it. But I don't think that at this point the valuation is A, over expensive, but B, if anything, I think we stay more in a trading range, and I don't think we're gonna see the kind of explosion that we did 2 years ago, when it went straight on a gap higher on a rally. So, but I do think that this between now and say summertime, and maybe it's gonna be this quarter, I don't know. I wouldn't rule out a new high or test that high, 152. But again, if they do break it down tomorrow just for whatever reason, or it gets a dump into the close, the odds are they could pump it right back to where it was, only because it's had two multiple quarters of positive returns. I don't think they lose money this quarter. In fact, if anything, it's undervalued in the sense that it hasn't really gone anywhere since June. So if you look at it that way, this is still a stock that both from a price action hasn't gone anywhere, and from a valuation standpoint, it's at its 5-year PE low. So I don't know if that's, we'll find out tomorrow. I wouldn't want to buy puts on this stock and bet against it. Let's put it to you that way. That's my 2 cents. A clinic, urgent care clinic, Nikki, Barbara, both of you, thank you for helping me out. I appreciate it. That's what CYH does, by the way. Thank you. And that's why I put it in there for a smaller cap. Both, and that's a little bit more than a seasonality. So I'd like to say that some of the things that we do now, this is kind of interesting. I captured this chart, the not knowing that we would have, just in case something went down. I keep talking about the live room and what are the tools that we use, and what have I done with the indicators that were created out of the book that I wrote over 20 years ago. So when someone says, hey, I wrote a book, yeah, great. So, how long ago? Was it on the New York Times bestseller? No, not really. It's a technical analysis book. People fall asleep when they read the first 5 pages. Oh, and what does the book do? Well, it had all kinds of neat little ideas about indicators, and does it work, or is it like old school? Well, it's kind of funny. We developed an Algo program based on it that works to this day. So I'm just going to cut to the chase and share that with you if you're interested. And it's kind of like the church of, not to be too funny, but what have you done for me lately type stuff. So it's interesting that we do have an indicator on the SPY, and for whatever reason, like a moron, I let this thing run 24 hours a day. I don't trade off it. It's a great indicator tool for our live community, that when we're during the day. And if you notice what we've got going on here, we've got this volume tool. So if the market gives, again, what I like to just share with you, if the market goes down, and as a price goes down and the momentum of the volume improves, it probably means the selling has dried up. So I'm going to go over this with you because this is kind of a key element for the market. So when this indicator goes short and the volume starts to move up, can everyone kind of see that pattern? Market goes down and the volume is getting green. In fact, the volume lines are moving up. Can everyone see that? So if this is something that's unique to that one signal, that doesn't make me want to learn it. But if it happens over and over and over again, I want to pay attention to it. So here's a little different story. Here's a trade signal. And by the way, just to be fully disclosed, when you see the entry that posts live on the chart and it's a green line connecting the entry, that's the exit. Green means it's a winning trade. When it's red, like this went long, it got stopped out right there. Red is a loser. When it's green, it means it entered, it went long, it got stopped out, it reversed, went short, and it covered the position. So the last pattern I shared with you, when a stock or a short goes in, the market goes down, and the momentum starts to get more positive, less negative, you can clearly see that's when either, if short, you better cover your shorts and start looking for new long positions. So that's where volume and a way of tracking volume, whether you're day trading, swing trading, volume is always and has been the lifeblood of the market, and it's fairly important. So these are other systems that we run. These are the NASDAQ 100. So as you can see, it might miss a trade or two. And with one of the neat things is over the last couple days, this program went short on Friday. So for short-term swing traders, dynamic. For long-term traders, it just kind of says that maybe we're going to see a pullback in the market. And if we do get a pullback in the market, the algo is short, maybe take some, just connect the dot. So I'm going to explain to you my method for my madness. If I'm looking for a market to go down, why in the world would I put an order in 50-50 for Amazon? I must be off my rocker. Why would I do something stupid like that? Because we're looking for the market to go down and looking for some high beta or correlated stocks in Amazon, which is in the queues, by the way, as everyone knows. I'm sure you guys knew that Amazon is in the NASDAQ 100, that I'm looking for Amazon to come down so I can buy the dip. By the way, I think even in this week's newsletter, I'm looking to buy the dip. I mean, you can't get, and that's kind of risky because it's only Tuesday. A lot can go wrong with this market. And if something does go wrong with this market, guess what? We have something called a stop loss that we're going to mitigate the damage on our stock trading. So the moral of the story is if the stock market is so bad, then we want to see probably heavier red momentum going down. And the momentum's kind of drying up a little bit of the negative volume selling pressure. I did want to share, if you're going to look at something, how good is it? This is the actual performance. The green dot is a new equity high. Now, this is an algo program, and I'll share some of this with you right now. And we're going to go to settings, we'll go to studies, edit strategy, customize. And this is something we built with my ideas based on that book you saw, the candlestick and pivot point trading triggers. But we just added a lot more criterias like when can we trade, how do we start trading, position sizing. This model here is based off $100,000. Get in as many positions as possible with $100,000. That's why over here you see 197. That's 197 shares. It's a little higher valuation, so it's 186 shares. So you can clearly see it shows we're using the position calculated method number 1, which states get me in as many positions as possible with 100 grand. We have money management risk. We have different holding periods. We have trailing stop functions. Start kicking in a scaled out trailing, and that's what the orange line is an emergency stop. Then these yellow dots take over as trailing efficient stops. So it trails and trails and trails, and then again, that's what determines its exit on a trailing stop. Kind of similar to what we do with the newsletter. But you'll see here's a PPS buy, and you'll find out high closed dojis. Interesting, right? So I am actually practicing what I preach based on what we wrote, which is still relevant to this day of material that was written 20 years ago. So if someone says, hey, is there something better out there, John, that you came up with? And I'd have to say no. And if you've heard my shtick before, I don't have anything new. I don't have a new indicator. I have only something that works efficiently, consistently across multiple time frames. And it's just that every once in a while, nothing's going to be 100% perfect. But when we put a few things together, whether or not you're buying puts on the cues or looking for the market to go down to get long, you're utilizing indicators to help you give you a gauge of what side of the market to be on, right? One last thing I want to share with you when it comes to this is, and it was asked to me before, so I'm going to just share with you because I think a picture speaks better than 1,000 words. So I'm going to go to studies and I'm going to add a study. Now with TradeStation, they've got, just like any other platform, a lot of pre-built things in there, Bollinger Bands. And I'm going to go and I'm going to insert something here just because I know people are very familiar with it. And Ichimoku cloud charts. Hit a 3 if you've seen or you know, or maybe you use them yourself. Hit a 3 if you use the Ichimoku cloud charts. Let me see. So yeah, it doesn't matter to me whether you use them, you've heard of them. It doesn't matter. So we're going to have a cloud chart here. So I mean, here's the cloud chart, and quite frankly, some people would say, hey, listen, when it's above the cloud, you get long. And it's interesting to note, and Senki line A versus Senki line B, if I'm pronouncing it correctly, don't ask me. It's late at night, and it's not one of my favorite. I don't use the tool. But I can tell you this, sometimes most people wouldn't buy when it's below the cloud. And this particular buy signal here, I'm not saying, and I'm not just cherry picking, but this is relevant because this is what started the year. This is only January 14th. It wasn't that many days ago. But most people don't look to buy something below the cloud, and that's that shade. That's why it's orange. But here's the volume indicator, and the market was showing that somebody other than John Person's indicator, was absolutely starting to buy the market down in here before it ever got above the cloud. Now, it's not a bad trade if you chased it and got above the cloud. It's just you added to risk. And I'm not saying that's a bad trade, but some people may have bought the cloud, sold the cloud. It's kind of I think that you need something more than just in what this indicator is based off of, at least the Ichimoku cloud chart. It's based off a series of moving averages, all right? And I think what I try to teach people, it's not just about the cloud and moving averages, it's also about the condition of the market. So even if you were looking to buy the pullback into the cloud, the momentum of the volume said, no, don't buy yet. We're probably got more downside coming. And I think that's where a lot of people might get saved on combining better tools. And another thing, not to dispel it, but it's free, and there's a reason it's free probably. But it might add value because you can see something, you can kind of see the trend in the market, and just like any tool, it works when it works, right? But I just wanted to say this is one of the tools out there that is getting a lot of attention in the technical world. The other one, and I'm going to go and get rid of it if you don't mind, we're going to go to studies, we're going to go to edit studies, and we are going to go to remove it and hit close. The other one that I think is very popular, and I'm just going to compare some things based on this. Now, one sample of charts from January 14th to today doesn't indicate a failed indicator or a great indicator, but it does give us a good sample of a time period where the market has rallied, the market has broken, it's gone sideways and chopped everyone alive, it's gone up, it's gone down. So we do have a little bit of sampling in that regards. So for swing trading, this is kind of a neat sample of where we've come from this year to where we are right now. And I think for an educational event, I think it's important to say, hey, is our work still valid, and is there something better out there? And the answer is our work is still extremely valuable and valid, and I think it's still outperforming a lot of other popular tools. Now, I'm just going to do this one last one, and we're going to move on. So I'm going to add a study, and then we're going to go right straight for the jugular here, and we're going to go to one that a lot of people use that I tried when Johnny came out with this, John Bollinger, that is, when this came out in the late 90s, it was like, it was supposed to be cool. And I really don't find any value. I mean, it crosses from oversold and gets above the 20-day. The middle band is a 20 period simple moving average. I mean, maybe you could close. It's a kind of people use it to define a squeeze, meaning a market that has higher volatility. The bands are widened, and when prices narrow, the bands pull together, causing a quote unquote a squeeze. Now, you guys, if I showed you, look at these particular ranges, and you can see that they're not as dramatic as this trend to that trend, which created this wide range, you could clearly understand, oh, we're narrowing. You don't need to be a rocket scientist to figure out expansion and contraction of the bands. So maybe it would be helpful to say, hey, I'm going to get short when the market gets below the 20 period MA. Sometimes that works and sometimes it doesn't. So maybe I'm not saying that one tool is the epitome end all, but at times, it seems we've gotten some sell signals that people think, oh, there's a squeeze, it's no big deal. And the next day you gap lower, and this strategy has already been short. This one, I'm not saying that we could go through and dissect everything, but I'm saying, to me, when I look at that, it's at the very least, the Bollinger Band might be redundant, and I'm not going to get as many clean setups and signals. Like, okay, buy it here. How do I know I didn't get stopped out? What was my risk management? So you get long when it crossed over the 20 period. Most people would probably freak out and get out of the trade. This strategy still maintains a huge win and keeps you long because the momentum of the volume combined with the indicator kept you on the right side of the trade. So I think there is some dynamics there. And again, a lot of people are familiar with tools, and they trust them. They build a relationship with that tool, and they know the ins and the outs. I just wanted to show, hey, is our work still outperforming? Is there a better mousetrap? And I don't think as that we've seen, in my humble opinion, and at least so far, a better mousetrap. So I just thought it would be nice to say, hey, listen, I'm standing here. You came and spent some time with me to learn something. Is there something worthwhile walking away with tonight? And that's like, first and foremost, I think that the indicators that we've created and written about that have been able to build a strategy like this have worked through test of time in current times as well. So that's the takeaway. So I'm going to do something here. I'm going to remove that so I don't mess things up, and we'll get back. By the way, the ES model went long, covered its short position, and went long on an uptick in volume. One thing that I am hiding from you or not sharing with everybody is another indicator, and it's not in my presentation today. But I wanted to show you, and I'll get to that in a sec. The Algo room posts these trades, and we put that, it shows it right here when we get into the trade station, the trade room platform, by the way. It posts it live what the position is doing, and you're going to like this. I shared this in the room today, and I thought I'd do it again. What kind of signal went long today? A high closed doji, something that was written 20 years ago, providing a nice entry, a reason for an exit and a reversal in the marketplace. Kind of neat to find out that type of strategy is still working. So what we do, in case many of you aren't is there a way to predict the end of day close? There's a lot of different people, Jerry, that want to bet for the end of the day. And one of the interesting things, and I'm going to just share this with you, on that Thinkorswim does, if you are looking at, for example, the SPY, and you might say, hey, why does John got so much room to the right? Because the person's pivots are calibrated to taking under consideration the high, the low, and the close. Tomorrow, the market is actually deemed, so it's not going to tell you where could the market close, but the general rule of thumb is if the market's truly bearish, it stays below the pivot. So I might not be able to tell you the exact close of the price, but if the market is below the pivot and the volume trend is down, odds are, at the very least, it's not going to close greater than the pivot point that day. So at least you could maybe do credit call spreads above the pivot point. So I might not be able to tell you where it's going to close at, but I can tell you the condition and a type of trade that you might want to do towards the end of the day. So if the market is truly bullish, generally speaking, the market trades above the pivot, and the pivot will act as the low for the day or act as support. So maybe selling any option premium and covered put spreads, or at least a dead man covered call, or a poor man, or whatever way you want to refer it, a bull put spread. That if the market towards the end of the day, if the market's truly bullish and you have mitigating indicators like the OBV is supporting an upside move and the pivot is showing a higher high and a higher green, if that's your case, that may be one. We may not be able to tell you where precisely it's going to close, but I can tell you that the condition would close above a certain level. That's pretty second best to answering your question, I think, as it gets. I think. All right? I think. You can tell me what you think. What I think is not as important as what you think, because it was your question. So in this day and age, a lot of people have different things. How many people have TradeStation that are here with us tonight? How many people have TradeStation right now? Great. So I'm going to cut to the chase. If you have TradeStation and you don't know anything about my indicators, all right, and you want to take the indicators and learn a little bit about what we have, and I've only not even scratched the surface for the indicators, right? One of the things I wanted to share with you is this powerful tool called the radar screen, which has every bit of information I want. Before the market closes, I can tell by these blinking lights that if it closes at this particular price level with decent volume, the odds are it can trade and maybe open higher tomorrow. So it's like giving me a leading indicator of the market. One reason we got out of the profits on the TLT options, because keyword is it's an option. And options have theta. And we had the dynamic upside breakout being in this trade. Not many people, in fact, I was bragging about it today. I think Stanley Druckenmiller, who was a partner, ex-partner of George Soros, was actually talking about he was short premium, or short the bond market, looking for yields to go up. Well, when TLT goes up, bonds yields go down. We had a different indicator suggesting that the yield, and that smarter people, maybe banks and institutions, they've actually looked at this momentum of volume. They've been buying bonds since the 90, all right, handle. When the market dropped the other day to last week or last month in January, when we dropped down to a low of 84, 89, they weren't selling the bonds there. They were buying more. So that gave us the inclination that we wanted to be with that trend. Took a little heat last week or 2 weeks ago. It moved off that low, held support, and then right back up. Weekly volume was pretty good. So it was time to just say, hey, listen, we've lost a little bit of theta, and for those options, it was time to take some money. So that was part of the trade. So everything on this radar screen, whether it's weekly high close dojis, the person's pivots, the location, they're color coded. Where is the market? I can tell you that the transportation IYT is trading at its weekly pivot support. There's weekly support. It's trading right at weekly support. I knew that by the color coding. So just by a little bit of practice, I can tell you the condition of price, the location of price, and kind of cheat and select a few trades. AMZN, Amazon. What I'm looking for Amazon was a pullback to get long against this last conditional change support. Monthly volume is not negative. No one's really buying it aggressively, but they ain't selling it. So I think one of the things that looking at the market, we were looking at buying a pullback. I didn't know if we were going to get to the weekly S1 or the weekly S2, but if the newsletter, as I shared with you, we were looking to buy because we were looking for a decline in the market because the algos were short. I go, well, if it goes down, Amazon probably go down, and we want to be a buyer somewhere in that region. Now, if you take a look at the momentum of the volume on this big sell-off, it's not that negative. So it gave us good reason to buy at least a scale-in approach, 50-50. And I missed the low by a few bucks today, but the bottom line is that's what I call a successful test of pivot. Now, I'll get real excited and probably We'll have to see. The first test of resistance is going to be up here at this 216, and then again at 209, something that we will obviously carry up in the live trading room. Now, I've been mentioning the live trading room because we don't really promote it a lot, and or my advisory service. And I don't know if you guys know what we have going on, but for those interested who have right now, by being with us, and I want to make your time valuable, we gave you some ideas of some stocks that I think are some high probability trades, some low end fruit, small cap names. But if you guys are interested in taking a whirl on our TradeStation program, you can go to a couple areas here. This is the Trading App Store. And I'm going to push this link into the room, and you can go and check it out for yourself. Fill out the information it wants. No credit card. I don't believe it asks for a credit card. And basically, you can go and get a free trial for the John Person indicators, everything that I've just showed with you today. So that you can get, whether you want to try it out on a monthly basis, you can try out the products that they have there and give it a whirl. So you can, if you like it, after a trial, a free trial, I think it's a weekly free trial or something like that. Once you have a free trial and you want to say, well, I'll try it for a month, you can lease it for a month. If you want, you can go for an annual. And if you want it full time, come back and give us a call, and we have that available too. So that's for those who get TradeStation, that want to try TradeStation. This is pretty cool. This is brand new. We've never had this before. So this is actually to help traders out to navigate themselves. If I can do it, and I do this in a live room, I can teach this. It's repetitive, and you can have this, and it is extremely well worth having. So therefore, that's one. If you don't want a few things that I've got to tell you, and I can't disagree with anyone because I just got an Apple update and it's irritating. If you don't want the downtime to try to learn something new, you're happy with what you got, but you want to try what we do, then I would strongly recommend giving our advisory service a whirl if you're a serious stock trader. You get a weekly newsletter in your email, weekly advisory service video discussing exactly what we're doing. It's uploaded every Sunday. We do a live trading room, and in the live trading room, we discuss exactly what's in that newsletter. And we also go over the trades that are being created with the Algo room. Or you can actually see them. You can mute me if you don't want to listen to me. You can mute me and just follow the trades. We have an SQQ program, which is the inverse to the NASDAQ. So when NASDAQ goes down, this goes up. Those are the actual trades. We have a crude oil because some people wanted crude oil, so we developed crude oil. It's pretty good. It doesn't generate a whole lot of trades because, well, most of the crude oil move happens overnight lately, and it's been kind of a boring market, stuck around 70 to 72. But we also have these pieces of data information that not a lot of people have. And it's based on the Russell and the S&P 500. The actual advanced decline on the S&P 500, the signals, the breadth, volume, and my proprietary JP oscillator. So those are the things that we have generated. And if you want information on that, the live trade room special package is $275 a month for real trades, newsletter, live access, email alerts, text alerts. So if you can't be in the room, sign up and we get text alerts for options as well as the Algo went short, the Algo covered short. So that way you're in the news. If you're interested in taking that, and we have a quarterly special for $587 for the quarter. That's 3 months. And I'd say, hey, listen, go with the quarterly special because that's another thing to help traders in this community. Again, we define our risk. We do a lot of trades. We do a lot of sensible trades. Now, I'm not a 1 minute tick day trader in stocks. I give setups that if someone wanted to do that, but we put out a lot of option trades and a lot of new trades that we find out, like, for example, the Nike trade, and we're always constantly doing intraday scans for opportunities. And if you're interested in that program, I would certainly say sign up for that, and you can get that right at our website, and that's easy to find. Go to personsplanet.com, products. You can go to the trading room right here, and that's where you go monthly or quarterly. And you can just sign up for that and give that. I would absolutely employ anyone that is looking for real actionable trades to go with it. So if you're interested for TradeStation, something is brand new. I think this is a fabulous event for you guys to try. Download the whole platform for TradeStation users. So if you're not a TradeStation user, I understand. But if you think that you want to try TradeStation and you have it and you want to try what we're putting out, this would be a pretty powerful way of doing it for free. So that's what you get. To get the scanner package, you can try everything you want with the TradeStation store and the indicators. I pushed the link into the room. That can also be found on our website as well. So that concludes what we've doing. I wanted to say for a introduction of what we're going to be doing for at least between now and say the March-April time period, some live analysis in the market. Some really, you would think that we would be talking about a lot of other things that have some excitement, such as, AI software, Palantir, or maybe Snowflake or MongoDB, some real sexy things. When you look at a company like D.H. Horton, you go, that's about as boring as could be. I said that about utilities too, and they turned out to be pretty hair-raising on the back of your neck with some of the moves they make, especially Constellation Energy, CEG. There's been some wildebeest moves. But looking at D.H. Horton coming off a high of literally, if you think about it, from last September at almost $200, straight down to where we were at 124. This is a doji, and by Friday you close greater, you're going to have a weekly high close doji. We already have an improved daily pattern that you can see with the volume. Other than John Person, somebody else has been liking to buy this. So we had a nice little setup there for D.H. Horton. So D.H. Horton's a home builder. What does that got to do with anything? In this environment, the economy sucks. But listen, if bonds go up like TLT, yield goes down. And again, tomorrow we have a home sales number. We got existing homes coming out. You got the inflation data. If anything positive comes out of that, what's the risk on some of these trades? They've already beaten the crap out of it, and nobody's looking at it, right? I don't think if you listen to the news today, nobody's talking about D.H. Horton. They're probably talking about Nvidia and Apple and everything else, because nobody really thinks that this stock can move up, say, 20%. And a 20% move on a 5% risk, a 1-to-4 risk-reward ratio, I'll take that over buying Apple any day of the week right this minute in that environment. So I think they're pretty good. We can define our risk. Think about stocks that go up today when the market went down. It's got some good relative performance, and that's why it's the PMC indicators turning pink. So that's some of the things that you just heard, how I would review a stock and where I would find the information. I'd start seeing it flashing with these blinking lights on the radar screen. And this is exactly the page that I use in the live trading room. And these are the exact scanners that we use in the live trading room. And this is the exact advanced decline work page that I created that we use for our live trading room. So this is the kind of stuff that we go over on a daily basis to discuss where to be in the market. So if you're interested in that, I'd highly say take advantage of this special. Go with a quarter. Find out what we're about. At the very least, you're going to get some of the most amazing training on a journey for the next 90 days, giving us a whirl. I really appreciate it, guys. Or at the very least, go to Amazon, buy the book. Don't fall asleep. Don't drink and drive. And don't drink a glass of wine and read my book. You will fall asleep. With that said, you guys have a great evening. If there's questions, send them to john@personsplanet.com. We don't have indicators on TradingView. I wish we did. They closed their API down last year. We were working on it, actually, and they dropped their API for whatever reason. I don't know why. Jimmy, thank you, and blessings to you too, sir. I can always use blessing. God is good, and God is always with us. It's always good to pray. For a good trade, a bad trade, for a rainy day, always pray. Thank God he's in your life, and that's my message to everybody. Have a great evening. Thanks for joining me, and I hope your time was well spent with me tonight. Thanks again, everybody.